Welcome to Trading Lounge and the Australian Report, and looking at the ASX on a daily chart here. And as you know, we've been working through this triangle pattern here with some success and some failure. And today I want to just have a double look at this particular triangle pattern here in two different ways here. So first of all, we know that we have a 5-wave structure moving down here. So that means that after a correction here, we'll see another 5 waves down. And to help confirm that, that means that this pattern here needs to be a corrective pattern. And it's doing that in that way because the first move up here is corrective in 3 waves. And each one of these structures through here is corrective as well here. What I don't know is I don't know if we're in a situation where we come just up to here somewhere to the 5750 area somewhere and then roll over down here, or we actually move up to the previous high here and then move down from there. I'm just not quite sure about that, and I wanted to explain those counts and then also look at the banking sector and then some of the banks and look at it on an intraday basis, because I think that we need to really look at it on an intraday basis to actually figure out if we should be long or short on this scenario. So one of the scenarios here is that if I just go to an intraday chart here, this is a 6-hour chart. Not that it makes any difference or anything, it just gives me a clean slate to work on. So this is one count here where we have our 5 waves down here as wave A, and then we've got this A, B, C here for the A wave here. And then I was thinking that the triangle pattern could also just be from in this space here. So an A and a B and a C and a D and an E wave here for the B wave, and then basically 5 waves up here for the C wave here to finish, and then down from that point. So getting support on 750 here would be critical, and also to the levels, the trading levels of 5.8 and 5.5 here, and the midpoint here, the 650 area, is a halfway mark. So that's really important too. If that became the resistance, then we know that we would be on the short side from there. And even so, if the 5.7 became the resistance as well, it did pierce through it yesterday and move back up. So it didn't really sort of give us that trigger that we're looking for on the short side. So we've got this particular, so it can move up to this space here, and if I just go to the 4-hour chart here, this is the way that we've originally counted it. And yeah, I'll just go back over that. The A wave coming down here, then the A wave, the B wave, the C wave, and then an A and a B and a C for the D wave here, and then an A and a B and a C wave here for this one here. So not coming all the way up through here, okay. And of course that level here, well, that's the 61.8% mark here. So yeah, we just need to see how it sort of, if it's going to spark up into this space here and then roll over. I'm not sure which is the right count, so this is why we need to take it on an intraday basis. We know that this market is, well, the XJO is really sort of torn between the resources and the finance as such, but at the end of the day it seems to gravitate towards the finance because they are the heaviest weight in that index. So when we look at the banking sector, the XXJ, the XFJ is the finance sector, but the XXJ is the banking sector. So we can see from here it's had a really nice, sharp move down here. So I've been looking at this as, looking at this corrective rally here is what we've been working through. And in this case here for this market, like ANZ and CBA and WBC, this pattern that moves up here in 3 waves here is really quite a nice ABC pattern. So we've got the A wave here, the B wave here, and then 5 waves in the C wave here. It's pulled up to the 50% mark, but not the 61% mark. Not that that's a big deal, but I've got to sort of ask myself, is this ABC pattern, is that it? Besides that, do you know what I mean? Is that the end of that? The other important thing here too is that this could just get a little bit larger here as well. So if I can just grab these drawing tools here, we could look at this here as the A wave to here, then the B wave back into the 61.8% mark. I've got that upside down at the 38.2. And then we know that the 61.8% is up here. So even though we've got 3 waves here, is that just the first leg? That's the problem that I've got. Okay, so I don't know if this is going to be the B wave here and then the C wave here, or we just basically drop down from here in 5 waves from here. So I don't know if we just come straight down, from this space, basically, move down from here, with this being down for wave 1 and back for wave 2 here. So today, if the banking sector triggers to the upside here, then we know that we've still got further to move up. So what I thought about that is that this particular pattern here, if I look at ANZ, for instance, here, that's the sharp move down here. And then we've got this this rally here. Now with ANZ and CBA, they've only rallied up a little bit, where CBA has rallied up to the 61.8% mark already. But at the same time, do we consider this, the A, the B, and the C wave here, and that as the A wave back for the B wave into this box where it is now, and then and then up from that point, Also with this too is that we could count this as wave 1 and back for wave 2, and then another wave 1, another wave 2 here. So we couldn't really go, we couldn't really be bearish on this particular market while this corrective rally is being in place, because we might get sort of tricked on it. If the 28 here, the first level here below the major level here, 30, became the resistance, which is below the 61.8, then would be confirmed bearish at that stage. So really, all our focus on the ASX today and the banking sector is in this move here, and in really in this little move here. So I'm just going to go from the daily chart into the tick chart here, and have a look at this, because ANZ's the first one to open. So, one of the first. So basically, where that opens to, it can help us. So we've got a situation where it can be the A wave, the B wave, and the C wave up here. Okay, and that's the end of it, and we continue to move down from that point. Or this A, B, and C here could just be the A wave here, and we'll come back for the B wave here, and we're going up for the C wave here. Or it could be a series of impulse waves as wave 1 and wave 2 and wave 1 and wave 2 here. So that's why I've got those there. I've got 3 of them there. So what I can say here is that from wave B here, we've got 1 and 2 and 3 and 4 and 5 here. And then we've got an A wave, a B wave, and a C wave in here, which is all really quite nice and tidy, if I could say that. 1 and 2 and 3 and 4 and 5 here for the C wave here, and then we've got 1 and 2 and 3 and 4, to 4 to here, and 5 up to here. So we can have wave 1 here, and then back for wave 2 here in the 2850 sort of area here. But it's also, if the banking sector is going to open strong, then it will just basically open from here. So what I was thinking is that, this move down through here, this would be about 50-60% retracement anyway here, So if ANZ opens I can't draw on that side, I can draw on this side. If it opens above this green line here, above the previous high here, then you know that what we can do is we can bring wave 2 into that little space here, and we will be moving up from there. So we would have wave, copy that, wave 3 here, and that will take us into a bullish mode for Friday and Monday. So that 28.70 on ANZ will be a nice little trigger to cement things, and the other banks are pretty much the same in line with that. With the resource sector as such, we've been looking for drivers there as well. So the iron ore here, just on the hourly chart here, we'd been looking at this as a nice wave 1 and 2 here, then 1 and 2 and 3 and 4 and 5 for the third wave, ABC for the fourth wave, and looking up for the fifth wave here. I could probably even just pop that straight in here now, and the reason for that is that wave 3 is the longest here, and if that's the case, then normally wave 1 and wave 5 will be roughly the same length, pinch of salt, and then we'll look for an ABC correction here. I can see that we've got 1, 2, 3, 4, 5 here, so it's quite possible for this to be finished, and if that's the case, then we'd be looking for an A wave, a B wave, and a C wave here, and then further up. If I'm wrong here, then this would just move straight up from here. But I have to say, because we've got 5 waves here, then we are in a bullish mode to the upside with this market, generally speaking. So CBA, BHP, for instance, is jammed up against the medium level, 25. So that's going to dance around that space there for a little while. Iron ore was a bit negative overnight, so we won't see those stocks move much. The crude was up, so the oil, Brent and oil up 1.5% at least, but the metals were a bit softer on that case. So we're not going to expect a lot from this. The US banking sector was up quite well. The financials are up the strongest out of all the sectors in the US, so and the energy sector as well. So oil and the banks will be the movers and shakers for the Australian market today. Now, that said, here I want to go back to the ASX here, and I just want to go in here on the tick chart here. This is 100 ticks. Now, with this scenario here, on the physical market, the move up through here, the cash market, has it already at 5 waves to the upside, so it can pull back. In this market here, I can see that we've got wave 1 and 2 here, then 1 and 2 and 3, ABC for 4, and then up for 5. So I've just seen the third wave here. So with this market here, I'd look for an A and a B and a C back into here, and then moving up for wave 5 here, then a correction here. So look, as long as this market stays with, the 5.7 is the big number here, as long as that stays as a support, then we need to look higher. If that becomes the resistance here, then you need to be on the short side. So that's the line in the sand here. And if for whatever reasons this little high here gets taken out here, then you need to be long at that stage there. All right, I'll leave it at that for the time being. Cheers.